Guys, what's up? Welcome back to another training episode brought to you by the Cryptocurrency Alliance. As always, your boy Dave Rodriguez here, one of the head traders inside the Alliance community. Today we're going to talk about entries and stop losses, why they're so important, and why you have to be very patient, because there's a lot of factors when it comes to entry. Your stop loss, how big it is, determines how much you can actually place on a trade, what your lot size is going to be. Your stop loss also is in a matter of pips, shows you a lot of things about your trade. How far is your stop loss away and how far is your take profit away? Am I 1-to-1 risk to reward ratio? Am I 1-to-2, 1-to-3, 1-to-4? This is all going to affect how many wins and losses that you can take during the week. So let me give you guys a good example here. All right, so here is a chart. Okay, this is in no specific time or order. You can see the dates and everything. I just took it back here. So we got a run up. We got a nice rally. Okay, we got a push down. Not a very good push down. Okay, didn't really retest these areas. No real retracement here. No real retracement here. But then we see a push down. Nice two candle push down. Two bearish candles. Followed by a bullish candle, and then 3 days of spinning tops. Okay, as you guys know, these are some of the biggest indicators for me that the momentum is stalling. Okay, for one, we had a run up, we had a run down, and then we had a stall. We didn't even double top. We didn't reach this area up here. So that's telling me momentum, all this momentum is dying. The upwards trend is ending. Okay, so where do we enter here to get a good trade? Okay, do we wait for this candle to close and show us confirmation that it's engulfing this price, that it is breaking these lows? This is again a candle that has been closed. So let's talk about the difference in entries and how they will affect us when we place our trade. So let's pretend we took a short position from here because we wanted to wait for a confirmation candle to let us know which way it was going. Okay. Now we need to place our stop loss up and above this area here. Okay, we've got to give ourselves a little bit of breathing room. Okay. We're 845 pips as a stop loss. Everybody get that? Okay, 845 pips as a stop loss because you've entered here. You could honestly probably do something like this and place your stop loss here, but you remember, you can always retest the highs. So the smart play is up here, 700 to 800 pips as a stop loss, and your take profit's going to be somewhere down in this head and shoulder zone. Okay, so your risk reward is almost 2-to-1. Okay, almost 2-to-1. We could make it 2-to-1 real quick. It's not that big a deal. It's still within range. It's just a 2-to-1 trade. This means you have 2 reward, 1 risk, which means, let's say this is 50 pips. This would be 100 pips to win, 50 pips to lose. Okay, but it's actually, a lot more than that, obviously. 1571 to 788. So this would be your stop loss if you waited for this confirmation candle here. Okay, but I wouldn't do that. If I saw this drawdown come up to this stalling pattern with these 3 particular candles, I would have went in after 2, but I would have entered after these stalling candles here. So I would have entered here. Give me one second. I would have entered here after this candle. I really would have entered after the second doji candle, and I would have placed my stop losses right there. Okay? Notice, now my stop loss is less than half. So less than half the stop loss now because my entry was here instead of after the confirmation candle. Now, let's take the target back down to where we were. And we are 6.7 to 1 risk reward ratio. You guys understand what that means? Instead of 2-to-1, instead of 50 pip stop loss and 100 pips winning, we are now, it would be like a 20 pip stop loss, or just say it would be like a 25 pip stop loss with like 200. Oh, I see 25 times, but 150. So 25 pip stop loss and 150 pip win. That's what that equate to. But really, it's 305 and 2068, guys. Look at the math there. 6.76 to 1. All because I had my entry in the right location. Now, this isn't a bad entry. It's just your risk reward is going to be way off. My risk reward is going to be way bigger than your risk reward, and my stop loss is going to be smaller. If you have twice the stop loss, you can use half as much money as I can. So not only does it affect how much your risk reward is, but it affects how much money you can use. So if my stop loss is way down here, my lot size is half of what it would be if my stop loss is here, because my stop loss is so small, I could use more money and lose the same amount as you down here. Okay, say if you used $1 lot size here, I could use a $2 lot size here, hit the same stop loss, and lose just as much money as you, but I used twice as much money. So not only is my risk reward way bigger, but my win is going to be twice as much as yours. So let's just take a look at this trade and see what had happened. Let's see if either entry was bad. Because we see the pattern here. We see the uptrend is kind of ended. We see the stalling. So you would have entered here. Okay. So those are different entries. This is what most people get wrong, is their entry. Okay. So look at the size of your stop loss. Look at the size of mine. Mine is less than half of yours. Let's see what how the next candle plays out. Okay, guys, would you look at that? We hit the target exactly, and I just drew this out. I mean, obviously, I've seen what happened before, but I just drew this out to these resistance areas. And we hit the target exactly where we wanted to. Look, no drawdown on your entry here. So you guys probably would have entered here. Most people, not you guys, I'm saying most traders would have entered after this confirmation candle. So no drawdown. Great trade. Great trade. But again, if you were here on my entry, little drawdown, this little candle here would have drawn down for me. On my entry, you could have used twice the lot size, won twice as much money with the same amount of work. So this actually played out very well. After these spinning tops and dojis, guys, look for these at the tops of markets. Not what they are, it's where they are. And we're up in a rally point, okay? Lots of confusion in this area. Look at this here. Look at this here. We're in that area, and it is getting denied after a huge run up, after a huge head and shoulder pattern played out, and then decided to keep running up. I mean, the head and shoulder pattern's done here, right in this area, and it just kept going. And then it completely melted to the downside because it gave us those indicators, those candles, letting us know what it was doing next. Right here, we talked about these. So it's not about these candles. This is the warning. This is the entry. This is a good entry too, guys, because it totally lets us know that this is the way it's going. But look at how much more profit I got than you. Look at my stop loss compared to the normal trader. I can use twice as much money here because I have half of the stop loss that you do. So I can win twice as much with the same trade as you, same setup, same everything. Same risk reward. I'm just using twice as much money with the same size account as you, same risk reward as you, and I've accomplished more than you with the same preparation and tools. So entry is everything. Make sure you get the right entry. Make sure your risk reward is on point. But the entry is everything. We'll talk about risk reward in another video as well, but I want to show you guys that entry is everything. Don't be scared to pull the trigger when you see the signs to give yourself a very minimal stop loss. If you are scared, you're just going to cost yourself money, even though you'll have a winning trade. So there's nothing wrong with waiting for the confirmation candle. This whole point of the video was just to show you the benefits of getting in early rather than waiting for that last signal. That's all we have for you today, guys. I hope you enjoyed the breakdown. Anybody who hasn't watched any videos before, if you scroll down the description, you're going to see a link. We have a free ebook every time at the end of our videos. It's the Cryptocurrency Consumer Guide. It has all our best kept secrets and strategies, tons of facts, and some key things you'll need to know in order to make some money and get started in this market. So click that link. It's the bitcoinconsumerguide.com/YT. That's like YouTube. Click the link, get your free ebook, and there's also a training series, an entire training course given to you for free by Cody Sperber, the clever investor himself, the guy that's given us all these opportunities. He'll tell you all about it. Make sure you listen, learn, and get your free offers, the ebook and the training course. We'll see you guys in the next breakdown. Have a good day. Safe trading.